Center. Good evening. Thank you for joining. Today's topic is about taxation of funds in Singapore. uh, Before I go into the fund, I would like to brief you about the tax principles in Singapore. An individual may be a resident or a non-resident. What I mean is resident for tax purposes and non-resident for tax purposes. A resident who earns an income other than salary, director's remuneration, fees, rental income, commission income, what all he earns in Singapore will be subject to tax. Besides that, if he's going to get any income from financial institutions, fixed deposit, purchase and sale of shares, all these things are not subject to tax. The same thing also applies to a non-resident. What I mean is, I'm not meaning the rental income, director's fees and remuneration, which is earned by a non-resident, which will be has to pay tax in Singapore at 24%. What I mean is the income you earn from financial institution, either fixed deposit, savings account, mutual fund, purchase and sale of shares. All these type of financial institutions investment are not subject to tax for both resident or non-resident. Then why you talk about fund and taxation of funds in Singapore? Anything you do under a company, it becomes business. If you're going to accumulate money from your friends, 4 of you or 5 of you join together and start a company and start making investments through the company, it becomes business, it is subject to tax. Then how do you attract more funds to be played in the financial center? Singapore, is one of the largest financial centers in the world. More than 5.4 trillion amount of money is assets under management is managed by banks in Singapore. So to attract more funds, create more jobs, to have a lot of spin-off benefits out of these investments, the government felt that we should exempt these type of funds with a lot of qualifications on that to enable them to comply with all those requirements under various sections in the Income Tax Act. They would like to allow to exempt this income from tax. So what are the various types of funds and what are the various types of licenses issued by Monetary Authority of Singapore, which enables you to get these licenses and get regulated financial management is carried on in Singapore, which enables you to get a tax exemption under various provisions of the Income Tax Act, which I'm going to brief you in the next 30-40 minutes. The various type of licenses issued by Monetary Authority of Singapore, I'm going to tell you about that. In equivalent to India is the Reserve Bank of India, RBI, where you go to request for permission. India also has got a lot of capital restrictions till today, even though it's becoming the 5th largest economy in the world, looking for $5 billion of GDP, $5 trillion of GDP. In that scenario, still there are restrictions, capital restrictions, so to make investments outside, which is managed by RBI. And there is an act called FEMA, Foreign Exchange Management Act, which is managed by FEMA in Singapore. The regulatory body is Monetary Authority of Singapore, which issues license for all the financial related activities in Singapore, like banks. If you like to set up a bank in Singapore, under the Banking Act, you need a license for establishing a bank in Singapore. If you like to establish an insurance company, you come under the Insurance Act of Singapore, which is governed by, again, Monetary Authority of Singapore. You want to be a fund manager or start a fund management license company or manage a venture capital, then you have got various Variable Capital Companies Act. Again, it manages funds through the company. The various type of licenses issued by Monetary Authority of Singapore, which I want to touch upon before I go into the rest of the presentation. You have got licensed fund management company called LFMC. Then you have got retail licensed fund management company, where what is the difference between the first one and the second one is means you go even to the retail customers. In Singapore, they differentiate between accredited investor and a retail investor. Now I define what is an accredited investor and a retail investor. Accredited investor is considered a person who has got a good knowledge of finance because he has earned and having a net worth of minimum of $2 million, of which 1 million can be in the form of a property, which is minus your liabilities. Suppose you have mortgaged the property and property value is 5 million, you have mortgaged to 3 million, then balance 2 million is there, which is considered for 1 million. The other net worth of the other assets you have comes to $1 million. So you have $2 million net worth, or if you are earning an income of $300,000 for which you get a tax assessment, you are considered as an accredited investor or a knowledgeable investor who has got the ability to take risk and take financial risk in the market. The others are retail investors who doesn't come into the definition or called retail investors. The government would like to protect them from various type of investments where they are not allowed to participate. So when I was talking about the various licenses issued by Monetary Authority of Singapore, they issued a banking license, insurance-related licenses. Then you have got licensed fund managers, which I was talking about. Then you have got retail fund managers. Then you have got venture capital fund management company, where you accumulate funds from various people to put your money into startup, which is not a listed company. Then you have got registered fund management companies and license are issued for that. Then you have got financial advisors license, a guy who come out with a lot of research on various shares and then give out a research report, or he also advise people where to invest money or take insurance policies and so on. So what they always look into is what is your background of your financial education, what is your banking experience, your track record, and then if you're going to seek a license, what's your business plan, what is the risk analysis you have made, which type of, they already defined you have to go into the accredited customers only. In very rare cases, they allow like a retail fund management companies, I was telling you, where they allow even the retail investors. So these type of licenses are issued by Monetary Authority of Singapore. There is also a capital restrictions where you should have minimum capital requirement of $250,000. In some cases, they also look for $500,000. Also request you to take a professional indemnity insurance for $500,000 before you are eligible to make an application to the Monetary Authority of Singapore. I would like to touch upon two other companies also, because they are also concerned with money or financial activities. This is about Payment Service Act, which I'm going to speak about at a later date. There are 7 different types of licenses are issued for under the Payment Services Act. Do you know about account issuance services? That means if you have a e-commerce, then you have to have a merchant payment facilities. All should be inbuilt into your e-commerce website. When people are buying goods from you for which payment has to be made, then you have got a domestic money change license. and cross-border money change license, money transfer also, where remittances are involved, merchant acquisition service, digital payments token, which is talking about bitcoins. I'm also going to talk about bitcoins in one of the later topics, which I'm going to cover. E-money issuance, that's e-wallet, all those things they are talking about to store the digital currencies. Then money change license, which I was talking about earlier. All these things are issued in two forms as standard payment institution and major payment institutions. There, for standard payment institutions, there are restrictions on the monthly transactions you carry out. All these things I will explain to you on a later date when I'm going to cover this topic. The second one, which I would like to touch upon also, which I'm going to cover later, is about Variable Capital Companies Act, which also collect money from various people, high net worth individuals, and then make investments into whatever the specialty in which they have informed you, which they give you the memorandum of application before they collect your money, whether they're going to invest in pharma companies, startup, or meditech, fintech, or AI related activities, if they are going to tell you in advance, and then start making investment into these type of companies, either maybe on an early stage, on a stage, which mid stage, or on a developed status of the tech companies. The last one which I want to touch upon also is about concern with finance, which also the sections which I'm going to talk about is going to cover, is about family offices where people have accumulated wealth, the generation would have accumulated wealth, or they would have come out with various products and innovation, or they would have sold the technology companies, would have gained $300-400 million, or built up the business and made money through 2 generations or 3 generations. So the family money has to be managed by the generation. Again, you can set up a single family office to carry on these activities. What is the purpose of this? Is that, as I was telling you earlier, you keep your money in a company and then invest. If the company has got $100 million and get a return of $8 million, would you like to pay a corporate tax of 17% or go to these particular sections, which government encourages you to apply for tax exemption status and avoid not paying a tax on $7 million of profit you have made of 17%? I gave you an example. This is not the scenario. If I give an example, it's easy for you to understand what is the purpose of looking for tax exemptions for this type of funds and managing funds, either your own fund, if it is a single family office, or it is a fund, if you're planning to have a venture capital company, or you collectively make people to invest into you and you start a fund to a company and manages it for the purpose of all the people who have invested, accumulate the profits, get the tax exemption, and pass on the benefit to the shareholders or the investees. What is fund management? These are the content of my topic, which is going to come. So who are all the big names in fund management internationally and globally? And what is the scenario of fund management in Singapore? And then I'm going to talk about also fund managers and what are the tax exemptions actually under section 13D, O and U. Previously, the 13O was called 13R and 13U was called 13X. So it's the renumbering of the sections. The previous sections R and X was there, which is now changed to 13O and 13U, which we are going to look into that. And we are also looking into equity market review group, which Monetary Authority has set up. I'll explain to you later on that. And subsequent to the budget, which was announced, again, MAS has come out with $5 billion equity market development program. And then I will conclude by telling you about Global Investors Program, which they talked about the family office and the benefit they are going to offer. What is the fund management? As I was telling you, fund managers primarily manage investment fund. They make decisions by collecting the money and investing in securities, balancing the portfolio with the aim of achieving the desired results for investors. How big is the Singapore Fund Management Company? As I was telling you, it is now at $5.41 trillion of money, which is managed by all the fund managers in Singapore. Need not be the fund managers, or usually, typically when you look into most of the sections of O, U, and what we are going to look into, 13D, O, and U, what we are going to look into is where all the fund managers are resident fund managers in Singapore. In the case of 13D, it can be offshore fund and maybe managed from overseas. Who are some of the big names internationally is, you know pretty well, BlackRock is a US company which has got a big office in Singapore. They have offices throughout the world because they have to manage 11.6 trillion of money. In the same case, the other big fund management companies in the world are Vanguard, State Street, and Fidelity. All of them are listed companies in the US, traded in the Nasdaq Stock Exchange. Even BlackRock not only have mutual fund where they collect money from public and invest in various listed companies in the US and other parts of the world. These people are also very good in making other types of investments. Not only they are only in portfolio investments. If there is a big building in Singapore available or a hotel available for 300 million, 500 million, they are the people who make those investments and buy the buildings and keep it as an investment. They are not sovereign funds. I want to explain what is a sovereign fund also to enable you to make you understand. Typically, a sovereign fund belongs to any government. Singapore has got two sovereign funds. One is Temasek, which is nothing but the surplus funds of the government is passed on to Temasek. The second one is GIC, which is called Government Investment Corporation. Temasek typically invest in local companies like Singapore Airlines, Neptune Airlines, and various other Keppel Shipyard. These type of local investments are made by Temasek. GIC make investments globally. If a property in New York is available, a hotel is available, or an office building is available, GIC moves in. They have divisions of various investment professionals. They either also invest in portfolio investments, buy various assets and type of properties globally. The other famous sovereign funds are all from Saudi Arabia. You have got Kuwait, Norway, Sweden, Denmark. All these countries also have their own sovereign funds. It's nothing but surplus funds which they try to invest globally to get a better return for the government. Pension funds are also there available in the global markets. Various types of pension funds are also invested by various pensioners which are situated throughout the world. Each country has got some of the big fund come out of the pensioners, which is also invested globally to get a return. Who are all some of the local players? I was telling you about Temasek, which is also one of that. They have created a Fullerton Fund Management Company. Another one is Lion Global Investors. These people are fund managers who collect funds from public or financial institutions. And banks can put their excess money into these institutions. And big companies, multinational corporations also, they will have a treasury department. They call it treasury department. Beyond the CFO, whose job is only to manage the company, there will be a treasury department. You will be surprised if I'm going to tell you about the top big companies. They call Magnificent Seven companies in the US. I'm talking about Apple, Microsoft. Then you have got Google, Nevada, which is a chip manufacturing company, Tesla. All these things are all considered Magnificent Seven. In the New York Stock Exchange, if you say S&P 500, these shares form more than 45% of the value of the stock market. They form the index in those countries. And these companies, if you look at the reserves, will be mind-boggling. These companies, not only their size is in trillion, if you look at some of the companies, Apple and Microsoft, all these companies are all worth 1 trillion, 1 point, even $2 trillion worth. Their size is equivalent to some of the countries' GDP, because the top country in the world with the highest GDP is US with nearly $20 trillion, followed by China, which is $12 trillion. The third one is Japan. After this is Germany. And India comes fifth with nearly $3.5 trillion. So after the fifth country in the world, all the other countries are $1 or $2 trillion. So some of the five companies which are talking about, their size is as good as some of the countries' GDP in the world. If you go and look at the amount of money they carry, like if you look at Microsoft, the surplus money may be in $200, $300 billion. You have to manage all this money. You have to get a return on this money. When I'm going to talk about Bitcoins, I'm going to tell you how big investments they have made by these companies into Bitcoin also. I'm now coming into our topic because it's a general knowledge I was sharing with you to go out of the subject to make you know more about it. Now I come back to the subject so that you can understand better about what you want to learn today. So all these financial institutions and companies accumulate money from public, accumulate money from multinational corporations to see that they make an investment and get a return, for which this fund should be exempted from tax through if they comply with most of the regulations which are laid out by the tax department and the Monetary Authority of Singapore. So what Monetary Authority has done recently is these are the act mainly they look into because it's concerned with finance. So these are the various acts which is concerned with money. So Monetary Authority requests them to give them, they are monitoring, conducting regular businesses by issuing them licenses. They look into all the other activities of these institutions to see that the money is invested by the public are safe. I've told you about fund managers or company which hold a capital market service license issued by the Monetary Authority of Singapore. And then now move into the various tax exemption schemes or various provisions under which they are exempted from tax. Their main sections are 13D, 13O, and U. When I'm talking about the tax incentives, I go into each one of the sections to explain better for you. 13D is where it's an onshore fund. That means the fund is created in Singapore. It's an onshore fund. The fund is not created outside. Where previously there was no size was given to claim for the tax exemption. Later on, they said you should have minimum $5 million to claim the tax exemption scheme. The fund must be managed in Singapore, and fund management company should be established as a resident company and also be administered from Singapore, and the fund administrator should also be a resident in Singapore. Who is a fund administrator? What is the difference between fund management and fund administration? Fund management role is to choose and make the portfolio of investments with his knowledge and experience and the risk which he can take is a fund management. Fund administration is accounting the fund which is being managed by the fund manager. What I mean is if the fund has got say $100 million, fund management guy has to look into where to invest these $100 million to get a better return. The fund administrator is to account this $100 million, facilitate by giving, typically now today, every fund administrator has got an app. So if you have invested, say, for example, I'm an investor with put $1 million of my money, I would like to know usually these type of fund administrators will give you an app, ask you to download the app and go in to see whether what is the movement of your investment. If I invested $1 million, I would like to know what is the status today, weekly or on a monthly basis. Usually, typically, they give you a weekly results whereby you know 1 million has moved up to, it has gained $2,000 more or $3,000 more, so that the fund is earning money for you. And whenever time you want to, they also prescribe in advance at the time of investing when you can withdraw the money or make additional investments into the fund. So typically, administrator is the guy who is a bookkeeper who maintains the detailed information about the fund. And you cannot do manually. You need all these things to be done in the system. And you need to have an app too. So various softwares are available. Various global players are there. You have to tie up with them to see a fund is administered by these administrators. So when I come to the tax, I'm coming back to the tax scenario where I'm going to explain to you. I told you very clearly, 13D is a offshore fund, 13O is an onshore fund. So 13D doesn't have any size on that, and it should not be a resident fund. 13D should not be a resident fund. So there is no minimum spending requirement also for 13D if it is a offshore fund. What is the purpose of giving a tax exemption for an offshore fund? The government is looking into if offshore fund is managed in Singapore, it has got a lot of spin-off benefits. Lawyers, insurance companies will get benefit. Finance professionals will be admitted to provide services to these companies. Then there is no 13D, which is an offshore fund. There is no requirement for minimum spending. If you look at 13O and U, 13O and U is only the size. 13O is $5 million minimum, which is an onshore fund, and 13U is a 50 million minimum required for the fund. So it can be an offshore fund also for 13U because based on the size, they want that fund to be operated. The spin-off benefit is gained in Singapore. For both O and U, there is a requirement for minimum spending per year. And then also we'll expect you to have recruitment of investment professionals. When I say investment professionals, these people are educated, they know how to do portfolio management, they do research, and also they are liaised with fund administrators to gather the information, to provide the information required by the investor. I now want to touch on the next one is about, before I go into the next topic, I already touched about O and U and D. Now, I want to tell you something about the venture capital fund management also. Section 13G of the Income Tax Act talks about, I was telling you that you go to the Monetary Authority, take a license to manage venture capital money. When people give it to you to invest in startup, you collect the pool of funds, accumulate and create a fund and make investment into various stages of a startup, which is not a listed company. It should be a private company, which is a startup company. There is a requirement that you should invest which are less than 10 years old, and then which is not a listed company. It should be a private limited company where it is a startup. It may be in any different type of tech, but depends upon the experience of the guy who has started the fund. He will be playing on and collecting the money and making investment into this fund. In order to get the tax exemption under 13G, what they require is 30% of the fund's money should be invested in a local resident companies, which is not listed. I told you it should be a private limited company. To enable the venture capital company, always there will have two companies. One is a fund company. The second one is administration company, which is a venture capital administration company. They will be getting their fees paid by the fund. So the venture capital fund management company also is incentivized by the tax department for the income they earned to qualify. They are not subject to 17% corporate tax. If you request for exemption under Section 43V, you will be taxed only at 5%, provided you comply with Section 13G of a venture capital fund. You manage a company which is investing under Section 13G. That means 30% of the venture capital money is invested in local startup companies. Now I move on to the next one is about simultaneously all these, when they give you tax exemption under OU and D or Section 13G and 43, all these companies, if there will be a GST remissions will be there. So you will start enjoying not only the tax, you will also get a GST remission for all these activities. Also, you will start enjoying on withholding tax. There will not be any withholding tax for these type of activities if they are going to engage in. Once you get a 13D, O, and U license to operate, which is issued by the Monetary Authority of Singapore, there's a portal in which you have to go and make an application. The same thing also applies to people who have taken a license under CMS license or under various license to manage a fund. They also will have a portal to report to them for changes which are happening. And whenever they give you the tax exemption through a portal, you make an application. The tax exemption is also given to you to the life of the fund. Means if the fund is going to be there for 15, 20 years, you don't have to go and make an application on a yearly basis. It is given to you for the life of the fund to manage the fund, which is exempt from tax. Now, I move on to the next slide is about 30-50 rule. What is this 30-50 rule? It's simple to understand for you. If 10 people join together and start a fund and then go and apply for 13O or 13U tax exemption, they don't want one of the 10 who is a company to hold more than 30% of the shareholding in that company because it's not diluted. If it is more than 10 investors are there, and if it happened to be a resident, non-individual means it's a company owning the shares, it should not hold more than 50%. Means the shareholders should be diluted. That's the purpose of the section. So they do not want to give it to a guy who controls the company through a company by holding more than 50%, or if it is only less than 10 investors, one company holding 30%. In that situation, if you don't follow the 30-50 rule, the tax department will not give you the total tax exemption. They will come out with penalties for not complying the 30-50 rule. So that is not a difficult issue. The tax representative or your tax advisor will look into that, will advise you properly that what are the regulations. And even then, when you're going to have a portal in which you are going to apply for a license, the chance of getting the license is going to be difficult for tax exemption because you are not complying with 30-50 rules also, because you have to disclose for all the shareholders, directors of the company to the monetary authority before you get your license to operate the fund or requesting for a tax exemptions from them. As I told you earlier, under 13O and 13O for non-SFO fund, SFO means single family office fund, must have at least $5 million in asset under management, which has come into effect. The next interesting thing what I want to tell you is, when you talk about SFO, when I come to the next transparency, I'll give you a more explanation and detailed information you can understand better. As I was telling you, when you're going to apply for permission, there is a minimum spending required. If your assets under management is less than $250 million, minimum local business spending should be $200,000. If it is below $2 billion, then it should be $300,000 and above $2 billion, your local business spending should be $500,000. Also, they look into, sorry, they also look into the professionals. I was telling you under 13O, and I was telling you, you need, under 13O, you need two licensed professionals, qualified professionals are required. Under 13O, you need 3 professionals are required to be employed in the company. In the recent budget, when they talked about, now I tell you before I go into the slide, I want to tell you something which makes you understand this slide much better. In the Singapore Stock Exchange, there are more than 750 companies are listed in Singapore. If you look at it, most of the companies, like top 100 companies, will have more than $1 billion capital. They got $1 billion club also there for all these companies to have discussions on various issues. But the stock market daily transactions is not respectable. So the government is thinking how to we improve more listing in Singapore and more liquidity in the stock market of Singapore. The total stock market capitalization will not be more than $800 billion, nearly. 750 companies, nearly $800 billion is the capitalization. But it is not as active like all the other activities which are happening in Singapore on the financial sector, like asset under management of $5.4 trillion. Ease of doing business, best airport, best passport in the world. But when it comes to stock market, still the liquidity is not great. There is not much transactions. So the government want to come out, how it make it more active, how it make it more liquid, more people participate. Then they set up a committee to come out with suggestions. How do we improve the performance of the stock market in Singapore, make more people to come for IPO, initial public offering, and have a great liquidity and transactions happening on a day-to-day basis. So they come out with some suggestions. The first suggestion they gave is, they call Equity Market Review Committee was set up. They come out with an idea that we should start giving a tax benefit to companies which are coming to Singapore to list, and also to fund managers to make them to bring in companies to list in Singapore. So companies, a tax benefit of $6 billion, they want to give per year of assessment for qualifying firms with market cap of $1 million and above, $1 billion and above. And then if it is below $1 billion, they want to give a $3 million of tax benefit. They wanted to provide this benefit from the budget, which was announced in February, until 2027. So they have come out with all the conditions. Everything is there in the chart which I've made, and also make fund managers to come to Singapore and establish companies here. So various concessions have been mentioned, which you can go through the transparency. So what are the first recommendation made by the Equity Market Committee has been implemented into the budget and has been made into law to see that they get the benefit, so that it brings in enhancement to the performance of the Stock Exchange of Singapore. After the budget was announced, I think if I'm not mistaken, budget was announced on 18th of February. On 21st or 22nd of February, after 3-4 days after the budget, post-budget, they come out with another $5 billion of equity market development program. This program is different from what was announced in the budget. They have not come out with the detail of the information of what they are going to recommend to make the equity market very active in Singapore. The program has come out with various facilities which they are planning to make the stock market more active in Singapore. Another thing, the change they have done is in the Global Investors Program and Family Office. I'll give you a briefing about the Global Investors Program so that you can understand better. A lot of countries in the world offer passports under the constitution. Typically, these companies are very small companies, teeny islands with 80,000, 100,000, 200,000 population. There are more than 195 countries in the world, of which some of the countries under the constitution issue passport. I've attended various discussions. This is all curiosity. I used to go and attend various talks on Saturdays and Sundays, whereby the lawyers typically they come and talk about 15 countries, 20 countries, they offer passports. Under constitution, you make a donation of $100,000, we give you the passport, or you make an investment of $100,000, or buy a property in our country of 500,000 euro, you get a passport. Or some countries, you move in, purchase a property, like Portugal, Spain is all very famous in the world. You come and stay in our country. I mean, you do not have to stay also, buy a property worth euro $500,000. We offer you a permanent status in 2 years' time or 5 years' time, you get your passport also. Some countries, what I was talking about, giving 100,000 donation, investing 100,000, you get passport straight away under the constitution. In Singapore, they started the Global Investors Program. I started doing this is under EDB. They started with $250,000. When I say $250,000, I'm talking about in 80s when there are pioneer status companies where some other companies moved to Singapore first in technology. Government started giving them pioneer status, and people who want to get permanent resident status come under the Global Interest Program, make an application to EDP, put your money of $250,000 into these new companies which are granted permanent resident status. EDP will inform you these companies you invest, we give you permanent resident status immediately. And then you are eligible to apply for a passport at a later date, since you become a permanent resident of Singapore. I still remember I started doing at 250,000, then it moved to 500,000 because the demand for this PR status has moved up. Then I moved to $1 million. I've done a lot of cases, and even in $1 million, a lot of our clients today we have moved on under the Global Investors Program, picked up permanent resident status in Singapore. They have not taken an employment pass, applied in the normal route for permanent resident. They have taken permanent resident directly by making an investment. You can also, later on, they amended to see that in 500,000, $1 million, you can start a company in Singapore yourself and then engage in the activity, but should not close it for a minimum period of 5 years. That means the investment should be lying in the company for a minimum 5 years, and you should not sell it or transfer the share or close the company. After that, the million was increased to 2.5 million. Then more applications, the EDP started getting it, and they started making it more difficult or tighten the regulation. I don't say difficult, tighten the regulations where more people are interested to have a permanent resident status. And today, when the family offices, single family offices started coming to Singapore, the high net worth individuals having $100 million, $200 million moving to Singapore, they also started asking for permanent resident status under the same Global Investors Program. Either you invest into, now today that 2.5 million has become $20 million. Means if you want to set up a company in Singapore, want to get a permanent resident status with $20 million, you invest into your own company. This is one of the investment criteria. But the other criteria is that the company should have had a track record of doing a $200 million of business for the past 3 years before coming into Singapore. Because you should be an entrepreneur, you should have done a business of $200 million and then move into Singapore with an application of $20 million. When the government started seeing family offices, single family offices being started setting up in Singapore, they decided that we should also consider people investing $200, $300 million to give them also permanent resident status, because they also started expecting permanent resident status to be awarded to them. The condition what they said is previously, the old regulation is out of the $200 million, you can have investments of 150 billion outside Singapore, but 50 million should be invested in Singapore in public companies, listed companies, REITs, or in private companies. Today, they have amended that regulation and started saying if it is a single family office, $50 million should be invested only in the stock market. Because I was telling you the problem earlier. There's no liquidity in the stock market and they want more activity in the stock market. They started saying single family offices, if you have $200 million, 150 can be outside. 50 million, we allow you to invest in Singapore, but the entire sum should go into the equity market. This is a new change which has come in. I've written both old regulation and a new regulation. If you read the old regulation, it says that it can be in real estate investment trust or in a non-listed Singapore-based operating companies, unlisted companies. But now the new regulation is that it should be only invested in equity companies in Singapore. So I briefed you about family office. I briefed you about what is Global Investors Program. So that's a new regulation when it's concerned with investing in Singapore. Now this slide talks about the $50 million in the Global Investors Program. I do not have anything much to say except saying thank you for listening to me patiently. I'm happy to take questions from the floor. Thank you for being with us patiently and listening to me. Thank you. Any burning questions, you can come to me. I'm happy to answer those questions. Sorry. Can you tell me any questions have come? Thank you so much, sir. Making it so simple to make us understand. Good. Any more compliments? Sorry, I'm not looking for it. I'm just joking to you. If no questions are there, can I? Can you reply to Rashida? Just a moment. I want to reply to Rashida. She has asked me, how do you remember so much of information on so many sections? I tell you, I read minimum an hour per day. And God's grace, I retain whatever I read. It comes to me when I have to say that. What is important is lifelong learning. It's very important in life. You keep on reading something. And I always read what is relevant to us. I don't read the Ukraine-Russia war. I don't read about Trump putting in more and more. I read and the headings and move on to the other topics. Because he's trying to have a tariff he's giving, is like showing the child, I'm going to give you the chocolate, I'm not going to give you the chocolate situation of putting the tariff. And the Canadians are so interesting. They keep on putting in the departmental store. I mean, even say Tesla cars can't enter Canada. Sorry, I'll read out any of the questions and come back to you. Thanks for sharing such a valuable information. Still remember, okay, what are the key tax available funds in Singapore? What are the key tax? That means you're not listening to me, the entire thing, what I was telling you, brother. Thank you. Thank you, Mr. Peter. Dr. Peter, thank you for listening and thank you for giving me a compliment to say that you have understood the changes which are happening today. What is Section 10L? Section 10L is Santosh Kumar is asking about Section 10L. 10L is about selling you, if you have foreign assets, you sell those things and brought to Singapore, the proceeds of that, it will be subject to capital gains tax. If you don't have substantial business, economic benefits in Singapore, and the Section 10L has got a lot of restrictions. But if you don't bring the money, there's no tax also. That's very important. You sell the asset outside, foreign assets, and don't bring into Singapore, that Section 10L, there is no tax. You bring it to Singapore, then they put into so many that there is an economic benefit, and it is a multinational corporation. They have operations here, it is exempt from tax. If it is not that case, it will be subject to tax in Singapore. That means Section 10L will tax uh, uh, a capital gains tax made by the sale of a foreign asset. It will be treated as a revenue income and will be subject to tax if there is no economic benefit in Singapore. What are the benefits of using variable capital company structure? I'm coming to Dharini's question. What are the benefits of using a variable capital company structure for funds? It's same. I was about to tell you variable capital companies also, any other fund request for O and U tax exemption. Variable capital companies also will go to, they are also collecting funds from various public and invest in various type of stages and various different types of technology. Can also go and apply for 13O and 13U tax exemptions. Many may later in other section, can you share more on offshore taxation? You have to keep on listening to my talk. I will also go out of the way and go to tell so many things and come back to the topic again like I did it today about the passport issued by various countries in the world. It's very interesting to note all those things. What are the main tax considerations when setting up a fund in Singapore? See, main tax consideration, what is important is that first you get an fund established in Singapore, get the approval from the monetary authority, because all the fund needs a resident fund manager to manage your fund. So resident fund managers, if they hold a license, they will charge you a bond to manage your fund and also based on the asset under management. Subsequent to that, you make an application to tax to monetary authority to get a tax exemption under 13O and 13U based on the size of the fund. If it is 50 million and above, you go for 13U. It is below 50 million, you go on a 13O exemption. It also depends upon whether it's an offshore fund and a local fund. IRS gives guidelines on 27 December where if an investment company spends $100,000 in a financial year, will be exempted from applicability of Section 10L. IRS given a guideline on December 24. T. Santosh Kumar has said that if an investment company spends $100,000 in a financial year, will be exempted from. No, listen, they are talking about the Section 10 talks about economic benefit. Economic benefit is a wide criteria of expectations. I have filled up the forms for economic benefit. You should have an operation in Singapore. You should have a management and control in Singapore. You should have major decisions, strategic decisions are made in Singapore. So many regulations are there. It is not spending 100,000 alone is going to get benefited. Please look into the section. You can go to the Income Tax Act and look into the section which has got so many conditions attached to that. Spending money alone is not there. I will read the IRS guideline, which is on 27th of December. Certainly, I'll come back to you. I'll read it and come back to you with my views and opinions. Certainly, the precision slides are going to be available in our website or they are planning to also put it into the YouTube. All my presentation will be coming in the YouTube also. I'm surprised about the IRS guideline on 27th of December, which I have not read it. It was not in the newspaper. If it was in the newspaper, I would have read it because meticulously I read all the newspapers. Secondly, even though I'm not in town, the papers are accumulated. Until I finish, I will not throw the newspaper. That's my habit. Any more questions to ask me? I'll be grateful. Which makes others also to learn from the questions you have with you. If there is no more questions coming forth, thank you for being listening to me patiently and make me to contribute to the presentation about taxation of funds in Singapore. Please wait for my next talk, which is coming in 2 weeks' time. Thank you. Thank you.